to the Real Estate Huddle. We're excited. We've got episode 122 today, and we're going to talk about a topic that's very interesting because everyone keeps saying the same thing, right? If rates keep dropping in 2026, because we're at an all-time low right now, and the 30-year fixed conventional rate's about 5.8%. You got VA and FHA rates in the very low fives, even sneaking into the high fours. So some exciting stuff. But here's the thing. If rates continue to drop, everybody is waiting for that, waiting, right? And does that mean that prices will actually be better, right? Or that mortgages will be more affordable? That's the question, right? And so today we're going to talk about how that could be true in some cases, but it could also be the exact opposite. But wait, before we do that, before we dig too far into this, I've got to introduce our newest member of our team, Trisha David, and also of the podcast today. So first time on, Trisha, welcome.
Thank you.
We appreciate you being here with us.
Thank you. Good to be here.
Yeah, and we're super excited to have Trisha on our team, and she's excited to get helping more people, so we're pumped to give you a discussion today on the interest rates and if they come down, this is what could happen. And so the common misconception that a lot of people have is that buyers assume that lower rates mean better deals all the time, right? And if historically lower rates, they often trigger more competition in the marketplace. Because if something is, payments are less, all of a sudden everybody wants in, and now all of a sudden it drives prices up like we saw it do in 2020 and 2021. And probably not to that extreme is my guess, because that was crazy. 33% appreciation in 2 years probably won't happen again anytime soon. But that competition leads to higher prices, and then it kind of offsets rates coming down a little bit too. So I guess that's the question, right? Does it really make sense to wait? And so today we're going to be breaking down exactly what will happen if rates do fall in 2026 and what you should expect for buyers, sellers, and investors out there, and how you can position yourself, to be ready when that next surge hits.
So I think the first thing we're going to talk about is what does lower rates do to our buying power? And I think we misspoke. We're not at an all-time low. We're just at the lowest we've been in a long time.
Since 2022.
Since 2022.
That's what I meant to say, yeah.
So rates drop. What that means is if you are pre-approved, ideally you are, by the time we're having these conversations, you're allowed to spend a certain amount of money. If your rate comes down, that just means more of what you spend goes towards paying down principal. You can afford a lot. So I think the biggest thing is that change in payments creates a lot of buying power. I think there's a stat we'll talk about in a minute, another section, but that just means we can buy more home, right? So I think what Landon said earlier is rates come down. We've talked many of these times where we've got all these folks waiting. What are they waiting for? If you're a buyer, this is what you're waiting for. So it's here. They're going to come off the sidelines, get engaged. They're going to be buoyed by a chance to buy more homes, spend more, willing to compete a bit more for that, which should drive a lot more activity, might drive the prices up as well. So an example, so if rates, in this example, we've had a better example here, but say they drop from 7% down to 6%, that's hundreds of dollars less in payment that you'd have, and or the ability to buy more home. So that's not small change. That's the difference between waiting, being stuck, and getting very active, being very engaged.
Yep. And for our average price in the Denver market, every 1% is about a $400 payment adjustment.
Yeah, it's huge.
Right?
So pretty similar here. So if you were capped at $500K when you're at that 7% rate, comes down to 6%. Now you're looking at homes at $550. That's 10%.
Yep.
Those who've been waiting, having had that second, third kid, waiting to move, they're ready to go. And those, more often than not, it's the first-time buyers we're talking to. They reach a decision where now they can move.
Yeah. And so buyers that talk to a lender and they get pre-approved, right, for a certain price, just know that that's kind of a moving target, right? If rates go up and down, you're approved for 500, you might be approved for 515 next week. You might be approved for 480 the following week, right? Depending on how they fluctuate. So it's a little bit of a moving target based on rate volatility.
Yeah. So kind of the takeaway is lower rates. It's not just helping buyers. It's like engaging them, activating them, getting them off the get them off the sideline.
Yep.
Yeah, and this creates kind of a sideline buyer surge where a lot of buyers are currently sitting out waiting for a better rate, and then when the rates drop, their confidence returns pretty quickly. So their urgency increases because they think that they're early to the game, essentially. And then what starts to happen pretty quickly is we see showings spike, open houses get more crowded, offers increase per listing, and buyers stop negotiating as hard. So this isn't a market where buyers disappeared. It's a market where buyers are waiting when they finally see what they're waiting for.
I think we've all seen that like firsthand in the last week. Right?
Yeah.
I've bid over asking as a one buyer client. We all had, several of us, all of us had open houses this weekend, 3 of which went under contract, at least 2, if not 3, over asking.
Yep.
Little change, big change in activity.
Yeah. Yeah, it's true. And you kind of feel it, right? That's why it's like a lot of people ask like, hey, what's the pulse of the market right now? They ask a realtor that, right? Because we're in the trenches. We're doing this all the time for people. And it's kind of something that you feel coming more before it comes, right? Before it gets there. And so I think that's the key is like understanding that there's economic indicators behind it, but it is kind of like to notice it early is kind of like how the market feels. And right now it feels like it's just a very busy market with lots of listings coming on and lots of buyer activity. And there's just more excitement to move for people than there has been in the past because of rates dropping. And I don't know what it is. Maybe it's the good weather here in Denver, how we haven't had a real winter. It just seems like it's a very busy first 2 months of the year for us.
Yeah, your dad's last monthly was very counter to what we've been seeing.
Yeah.
But it's a much more macro national view, whereas for good or bad, it's been 60 degrees here in Colorado for a very long time, and
Yeah.
feels like it's really juiced the market.
People are excited about moving again, which is great. Yeah, because volume's been down for 4 years in a row with people moving and the number of transactions, and it seems like this year it's coming back. So it's kind of fun. Awesome. And so it's not a market where buyers have disappeared. It's really a market where buyers are just kind of waiting on the sidelines. But here's where it gets really interesting because, everybody always thinks that when buyer demand explodes, that sellers will flood the market too, because there's people that are buying and selling at the same time, but that's not really how it works.
Right, and that's why inventory doesn't raise fast enough, and it's because buyers react faster than sellers. More homeowners are locked into that 3 to 5% mortgage, and even if rates drop, many still won't sell. Inventory remains the biggest problem.
Yeah, definitely. And I think that's true because there's so many sellers that we know of from 2020 and 2021. And before that, we forget that we had rates in the 3s since 2009, 10 timeframe, right? So it's like a 17-year, well, I guess if you go to 2022 and they went up, right? It's like a 13-year time span where rates were ridiculously low. So there's still a lot of people that are locked into those low rates that are now like traveled 10 years into their amortization schedule on their mortgage. They're not moving, right? Like those people are holding that thing for life or for the long term because they're just cooking on principal. Every month they're paying down more and more and more, and they're paying less and less interest. So a lot of those people, they're not flooding the market like you may think.
But when the rate goes, if you're waiting to buy your first home and rates come down to 5.8, like that's it. That's all I need. I'm going.
Yep.
If you're sitting on a 3.5% mortgage, even though I want an extra bedroom, it may not be enough because I still don't want to pay 5.8 or something.
Yep.
So misbalance.
Exactly. Yep.
Yeah, and I think there's kind of a myth amongst buyers, a lot of them who are on the sideline of like, oh, I'm just going to wait until those rates drop and they come down, and then I'm going to buy and I'm going to get a really good deal. And the thing is, that's a good idea if you're the only person that has that idea. But there's a ton of other people that have had that same idea. And so when those rates come down, you're going to have a lot of buyers who come into the market, and that's going to increase prices. So you might actually get a worse deal because you're going to be paying more for a home with a better rate, and your monthly payment is going to be similar. Because like, as we know, like buyers are looking at their monthly payment. They're not so much looking at price. If they say, oh, I can put in a $600,000 offer and it's still under that number that I came up with for a monthly payment, they're happy to do that. They don't care if it's $550 or $600 if their monthly payment is still going to be the same.
Totally.
So that good.
Yeah, no, I agree 100%. And like people think that they can just time the market and see it coming and then go, but competition changes price like quickly. It happens fast when that, like a light. I mean, I remember being back in 2007, right as we were heading into the recession, right? And we went from about 12,000 homes to 28,000 quickly, right? And then the opposite effect happened from 2011 to 12. We went from 28,000 homes to 8,500, like quickly. So it can change fast, right? And when that changes fast, pricing can change fast too. That led to almost 10 years in a row of double-digit pricing. It was crazy, right? During that time, as after we dropped from that high point of inventory. Right now, we're sitting at about 8,100 homes on the market. So it's kind of a similar spot to what we were in 2013, timeframe. And so it's going to be interesting to see if that continues to rise and we hit our high point of 14,000 homes this year, or if it continues to drop down even more and get more and more competitive as people get excited about moving again.
I think part of what you're getting at is like we talk a lot about the financial side but a lot of it's emotional. And if I know that I can afford it and I'm amortizing it over 30 years, works in my pay point, I don't mind bidding it up.
Yep.
10 grand. That's how prices go up.
Yeah. And for somebody listening, it might seem like paradoxical, like, okay, well, if rates come down, it's more affordable. But then if rates come down, prices go up. So how do you win? And for buyers, I'd say the really important thing right now is you have a lot of leverage where you can negotiate on a home, get a better price for the home. You can get repairs done on inspection, get concessions. So for buyers, I would really say, like, if you've listened to this podcast before, you've heard, marry the price, date the rate. So it's like, get a great price right now while you can. Get rate concessions, like a 2-to-1 buy down, which we've talked about before. Get concessions towards your closing costs. Get all of those inspection items that would be ignored in a more competitive market. Make the seller fix those things. And then when rates come down, if you have a 2-to-1 buy down, use that money to refinance. Use like that money that you saved getting a really good deal to refinance. And then you kind of double dip. You get the best of both worlds. And for sellers, rate drops create a good selling window. So if a lot of buyers are coming into in the market, they have that, if 1% goes down, they have 10% more buying power. That buying power can come to you as a seller. So if you're prepared and you're ready to list, when that happens, that's where you can really take advantage of it. And it happens the most for entry-level homes, but also just like desirable homes, well-maintained homes, well-staged. So if you're doing things right, you can really take advantage as a seller.
Totally. Yeah. And it's like, where do you want to be? Do you want to be already in your home and then just watching the rates and refining on a trigger when rates get lower? Or do you want to be on the sidelines still waiting and waiting, hoping rates come down, and then when they do, now all of a sudden everybody's in and you're competing with all those people? So it's like, just understand that rates change all the time and you can refi anytime.
Yeah.
And you can even do a no-cost refi. That's the other thing that a lot of people don't realize. They think, it's such a huge cost to refinance. If you take a quarter rate higher, you're going to have no cost to your refinance, which is kind of cool. So you might have an appraisal fee, or you might have a standard closing cost, but it's not more than like $1,500 with like a true no cost appraisal is a really good thing to do. So, and you can even absorb those costs in a rate adjustment. Take 3/8 higher and then have zero cost. So I'm speaking like hypothetically; those aren't real numbers, but talk to your lender and find out if that is a good option for you, and then maybe that'll give you the courage to just go buy now before this sort of thing happens. Because if it does, it's not the funnest. You ask people from 2020 and 2021 how they liked their buying experience. 82% of them say they hated it. Yeah. It was awful.
And they don't even love their home anymore.
Yeah.
And that was when there was all that competition. Rates were low. People were ready to go. And you're putting in offers. And it's like, hey, the other offer is 50,000 over list. You guys want to be 60,000 over list? Like, so yeah, I think definitely for buyers, it's like, get a great deal right now while you can. Let us negotiate a really good deal for you. Get those concessions.
Yep.
And then the rates come down. You get the benefits of both sides instead of paying a lot for that home and then you have a lower rate. You got a great price. If you have concessions, you don't even pay the higher interest rates, and then you're locked in permanently at the lower interest rate. So for buyers, that's a strategy I think a lot of people don't realize is available or, an advantage for them. They just want to wait till the rates come down, but actually taking action first is better.
Yeah, totally.
You can tell this is our pain working with buyers. It's always now.
Yeah.
Best day was yesterday, second best day today. So that was a fun one. Rates have to come down so we can have this conversation.
Yeah.
They are. Hopefully they stay down.
Yeah. No, and that's, I guess, the biggest question is like, how do you position yourself other than just buying now? Like, how else can you position yourself if you're a buyer so that you're not competing with tons of people down the road? Like, what is there any other best practices that you guys can think of that buyers could do right now?
Get a good agent, knows how to negotiate. That'd be the number one thing I'd say.
We talked a couple ago just about the other attributes of an offer that can help you stand out that aren't just price based. Quicker closed, having good money down, quality of your offer.
Yeah.
VA loans of late. Anyway.
Yeah. And I think too, like, there's not enough attention on these listings that have been on the market for a long time. Like,
days on market.
They're very underrated. The homes that have been on for 90, 100 days because they're cosmetically not passing the beauty test. Like, those ones are the ones that more buyers, I think, should be focused on if they want to avoid all the bid frenzy, because everybody gets so excited about these first weekend on the market type properties that are updated. But they end up being a bidding war, and the price sometimes doesn't make sense. Where buyers who look at a place that's 70, 80 years old that just has Formica counters and boring taupe dark paint, or all the grays that are now kind of out. There's nothing. It's all vanilla. There's nothing super exciting or flashy, but it's a pretty good deal.
I feel like we're all pretty good at just looking and knowing counters, paint, this. Great, that's $40,000, and we can get this house that's been on the market for 100 days for $50,000 less than a very good comp with upgraded. You make it beauty, and you got $10,000. I mean, simple math there, but that's kind of fun on our end because we can see that, and we're going to do that anyway, finding the comps before you put an offer in.
Yep.
That gives you a lot more power.
Yeah.
And to your point, you're not fighting the world on those.
Yeah.
You're fighting one person, the seller.
Yep. Exactly.
Yeah, it's kind of like the movie cliche of like the love interest is her hair up and glasses on, and everyone's like, oh, she's not pretty. And then she takes her hair down and takes the glasses off, and it's like, oh my gosh, she's so pretty. Like, I was at a buddy's house that I helped him get having dinner last night, and they just had to like remove some ugly wallpaper. They repainted. They just did these like little cosmetic things, and it's an amazing house. It has great bones, and it was just like an old lady lived in there who had just wallpapered like 3 layers of wallpaper, everything, and like made it look a little wacky. But yeah, you can find those homes that are a great deal that just have those little cosmetic things that have a bigger emotional effect on buyers than it actually has a material effect on like the home.
Totally.
That's a drop the mic right there.
That's great. It's good stuff. And I think, like, if you want the house to, just one strategy to help the house put its hair down, per se, is a lot of buyers don't realize that you can ask the seller to write a check in the negotiations to your contractor of choice to get something done. So if you don't have the cash to do it, maybe that's why you're not looking at tired homes. You can ask in the offer for the seller to write the check to your countertop company, or write a check at closing to your carpet company, right? We can't use lender credits that way, or seller concessions in a contract that way, but seller can write a check to a third party and deliver it to you at closing, right? So that's the cool thing is there's ways to work around that and still get stuff done with the seller's equity, basically. So awesome. Well, to sum it all up, when rates drop, it increases competition. which also increases sellers' power in the market, right? And it makes it so that oftentimes there's more bidding wars. It raises the price, and it may not be all that it's cracked up to be, even though everyone's only focus right now seems to be interest rates. But if that competition does return, you want to make sure that you're working with a pro, and we can certainly help you with that. So thank you so much for listening. And if you're tired of waiting for rates and this makes sense, what we're talking about, give us a call. We're happy to get you started on your journey to be able to get into a great home. And on the flip side, if you're looking to sell and you're thinking, wow, it's finally a good time to list because people are actually excited about moving again, you're right. Give us a call and we can help you prep your home and get it ready to sell for top dollar. So thank you so much. We'll see you on the next one.